afternoon, everybody. Welcome to your Thursday edition, tail end of the week. We got just a couple days left in this wonderful month of August, which has been a pretty fruitful one for myself. Crypto's been a little bit of an interesting ride, but the equity markets and my day trading and just investments have been doing pretty darn well. So pretty happy about that. Hope you're all doing well. As I mentioned on yesterday's show and every show, I steer these in the way that you guys would like. So I'm looking for more questions and content pieces that you guys would like to hear. I don't know if anybody got the chance to see me on the Ninja Trader Live show. That was kind of fun this morning. Got a chance to join those guys. They've been doing a great show over there. They do every day for multiple hours in the morning. So if you are in the futures markets and you have a Ninja Trader account, I think you can actually get in there even without having a Ninja Trader account. You can log into their site and see them broadcast live every day. But for those that are in the markets, another resource for you. Two good guys, a lot of experience in markets. So today I did about a half-hour show. It was my first time on their program, so they didn't know what to expect from me. Hopefully I did okay. They kind of pushed me just towards cryptocurrency and digital assets and not much else after that. But it was fun, a good time, and hopefully I'll be back on there. And I invited them to come on this show, so hopefully we'll have them. We had Tom and Jim who will hopefully be on this program in the future. So let's start off with our topic du jour. I was going to start straight into this, the latest GDP data, but because Margaret asked, did you day trade the futures market? Yeah, I did today. And I have to, it was one of those days, you just shake your head and you go, you got to be kidding me. I'm going to do a poll here. Let's see, start a poll. One second, dead high. I'm writing in here. The question for the poll is, hopefully I typed it correctly because I was doing it live. Have you ever been stopped out at the dead high or low of the day? So either way, if you've got a trade in, and literally to the tick, like you just see your trade and it just disappears and then all of a sudden it goes the opposite direction. I'm just curious if that's ever happened to anybody. It's so frustrating. Because you're like, God, I had it right. And in particular, it really hurts when the market does what you think it was going to do aggressively. And it's, you look back and it would have been one of those just fantastic trades out there. So yeah, that's what happened to me today. I'm letting the poll go here for a little bit of a second. Good afternoon, Tyler. Or Kenny, Tyler, the man with two first names. Kenny, is your middle name a first name as well? Like John, like Kenny John Tyler. So when you get in trouble, like Kenny John Tyler, something like that. So this is what I look like today. This is how I felt because I had a stop loss in place, was short S&P futures, had a few contracts on. Things were looking okay. Wasn't the best. I was going counter trend, but I kind of felt we hit a double top and we're going to slow down for the day. And it literally went one tick above, it went to my strike price, I'm thinking options. Kenny Michael Tyler, you are a three first namer. So let me bring up the S&P futures for you guys so you can relive my pain today. I was kind of getting ready to do that show, so I didn't have a chance to really sit there and monitor this one. I might have stretched a little bit. But as we came into this high from right in here, which was like 9:15 this morning. It sold off, rallied back up to it, and I was playing this double top. So I played this double top right, like the market was like this. I was just playing this little double top right here. And for a few bars, it was actually working pretty decent. Then it moved back to the upside. And I had my stop loss right, I'll put the line on it because this was my stop loss, was right there. I wanted to go, a few ticks above this. The high of the kind of double top formation I was looking at was 5,662 and a half, and my little level up there, 5,063 and a quarter. So a point and a half above that, which would have given me, I had a predefined stop loss on it with my 4 contracts, so it would have been okay. So anyway, got stopped out, ended up being a $400 loss on that one, which is not the end of the world, but then look what happened. It was one of those, like, you got to be kidding me. Come on. And now, there's the trade. So instead of, and mind you, I was in this thing at like 661 and a half, like right as it came back up into it. And we're currently sitting at 618. So, nothing like a 43-point potential gainer on that one, but it's okay. Is what it is. That stuff happens to everybody out there on a regular, not on a regular basis, because if I look here and that poll, it looks like it's only happened to half of you. only half of you? Well, I have to say, for those of you who've never been stopped out at the dead high or dead low, brace yourself for it. It's one of those it's so demoralizing because you're like, dang it, one tick, 1 point, 1 penny, 1 nanometer higher or lower, and I would have been safe and capitalized on that nice big move vast majority of the day. But instead, you're stopped out with a loss going, dang it, why? How did I meet John Cagnina? I've been friends with a guy named Michael Burke. So Michael Burke he used to be one of the chief, education guys and tech guys, and just one of the most helpful, amazing humans you could ever imagine on the side of trading. He worked at TradeStation for a long time, and I did a lot of presenting at international conferences, trade shows, and we had a really good relationship with TradeStation. They invited me to speak at their booths many times and stage presentations because I used TradeStation, so it was great. And we've maintained a friendship over the years, and a couple other people that I used to work with at Trading Academy, Tim and Jason, have both gone over to work at NinjaTrader, and they're great video production people. So definitely have some friends over there, some connections, and I just kind of reached out to them, and I wanted to get their guys on my show, and he said, hey, first, why don't you come on our show? And I said, let's do it. So I went on there, and they were both really nice guys. Very knowledgeable, very nice, concise questions. I talked a little bit too much, but hey, I'm finally a guest on a show. I get to talk. Yeah. A little bit different than doing my own show where I talk all day long. I ask myself questions on this program. But yeah, that's how I met him, and it was nice. Again, they'll be on this program here in the near future. John, I'm demoralized because I walked away and missed it. Horrible. I'd rather walk away and miss it, John, as opposed to have a loss and then watch it do exactly what you thought it was going to do. And literally, I don't know if I'm the only I should go back and look at the time and sales on this trade because I didn't see how many other people were filled at my stop price. I may be the only one, which would be even worse if you can record just this single little pop there and then rips down to the upside. Hello, Rita. Good to see you. Welcome. Cool. Found the video and watched it. Good. I didn't know they posted the whole thing. I think they start that at 6 in the morning. I was on at 8 a.m. So 2 hours in, I believe, is where you'll find it. But you can scrub through it. But okay, so yeah, that's me ticked off. I put just because I got hit by one tick and just grief, struggling, pain. But again, I don't let it get to me. It is just part of the nature of trading and investing. And for the 50% of you who voted and said that you had never had this happen to you, just remember, it's okay. It will happen, and it's going to frustrate the heck out of you, and you're going to second guess yourself. Don't. I did the right thing because I was going counter trend. This trade, I know a lot of you are going to look at this and go, what the hell were you thinking, Merlin? Why would you go counter trend trade? Because in my gut, my experience, it was starting to slow down a little bit. It was still showing an ascending triangle here. So as it broke through this, I was like, okay, I'm kind of in trouble now. And then I just left my stop loss. It took me out and then did what I thought it was going to do, which is a little bit of weakness. Again, we can talk about the components of that as to what that weakness was, why it was there, and that's really, in my opinion, still on the NVIDIA side as well as on the GDP side. So, why did markets rally as much as they did today, or at least some of the other indexes? Not everything was rallying. S&P was flat. The Dow was rallying today, and the Russell was up a little bit. But the GDP numbers are the ones that we talked about yesterday. So GDP is the first of 2 data points for this week, which I think are very important. The biggest one comes out tomorrow morning, and that should be, if I remember correctly, that's 1 hour before markets open, but we'll check that here in just a minute. So let's go and look at the GDP, gross domestic product numbers. Here you have them on your screen. The GDP numbers came out much better than expected. They thought it would stay at 2.8%. That was the forecast. We came out at 3%. So I'll zoom in past the pandemic piece. I guess before I do that, just note by looking off to the left here that for the most part, GDP is always above 0 for the most part. And, when you get it above 2.5, which is where the horizontal line is, to me, that seems to be about the average. Anything above 2.5, at least for the last 24 years, seems to be right around normal. Anything above that is going to be good. Obviously, anything below 2.5 would be negative. So if we zoom into what's been going on since the pandemic, we've been doing pretty good. And again, there's that 2.5 line right here. It's been looking pretty good. And what happened today, and for those who don't know how this works is, I'm trying to cut off the last data point. I guess I won't do it. Forget it. I won't cut off that data point. What happens is this number calculates the last 4 bars and does an average of it. It brings it, not average, it annualizes that rate, right? So here you had a 5.2 reading in November, then you had a 3.2, a 1.3, and today 3.0, averages out, you're gonna get 3.0. This last one, which is a little bit lower at 2.1, that fell off the books. So that one is now off the books, and we get this quarterly, quarterly number, so it's gonna be the last 4 here. That's your annualized GDP number is 3%. This is good. Now, why is this something that the markets might rejoice for? Well, we've had this discussion over and over again, and I don't want to waste our time repeating myself again because we have a regular group here. But ultimately, it's about interest rates and what the Fed's going to do with interest rates on September 18th. If GDP number looks good and is actually starting to tick up a little bit, then really our only concerns are going to be retail sales, manufacturing, and of course, unemployment. We won't get unemployment for another week, so we'll worry about that one next Friday. But for now, GDP seems to have alleviated a little bit of pressure on the Fed. Remember, if GDP continues to slump, then the Fed can cut rates much faster, right? Because they need to spur growth. But now that GDP is stable, the Fed has a lot more flexibility. They could raise rates if they wanted to because GDP is doing fine. But even at your 5.5%, growth is still happening in our economy. So that's good for the Fed. It gives them, again, much more room. Now, think about this. What's going to happen if our GDP numbers are growing and we do get a rate cut? Because now they're trying to fight unemployment. By cutting rates, you make money a little bit cheaper. All of a sudden, that brings in more capital into our equity markets, and that could even further jump our GDP numbers higher. So I think a bit of optimism was there today based off that GDP number. And we can look here. Let's go to the S&P. You look at I always like to look at the times that these things went out. GDP was, of course, early in the morning, 1 hour before the markets open. So if we go out to the futures here and go to 1 hour before the markets open, right in here is where that GDP number came out. So you saw an initial surge on it, actually came back down. I think that was probably the NVIDIA pain point, and then just slowly trogged higher for the day. So all in all, I think this is a 1 minute time frame. Let's get off the 1 minutes. I like 5, a little bit better, easier to read, a lot of data. Okay, excellent. There we go. So that's your day, how it started, and the main pieces. GDP, of course, huge for us. It's been relatively low, getting above 3. That's great. The higher we can get it, the better. We won't get to the levels that China had, right? There were in the heyday, China had 10% GDP numbers, but that's crazy. We won't get to those levels, barring some crazy revolution. Maybe AI helps foster that as well. Let's see, what else did you guys come through here and say? All of you got stopped out today too. I got lucky today and waited for the downside 11 a.m. Good for you, Oliver. Nice. That was a beautiful, when that thing started breaking the lows, it was just like, oh, here we go. And I looked at it. I wanted to jump back in. It's like, no, I hit my daily stop loss. I'm out. I'm fine. No problem. I will move on. It's okay. I can move into something else. So there were a couple questions that I wanted to get to. Where were those? Let me see the I had graphics for these, I promise. One of them was on Lululemon. So Lululemon came out with earnings today, and their share price took a bit of a hit. So let me show you the wonderful graphic here I have for Lululemon. There was another graphic that was created that showed a whole bunch. It was like an empty gym with nobody in it. So initially, Lululemon, actually, as I was building this show, was taking a dive on their earnings. They were down pretty significantly, and lo and behold, this is why you just stay away from earnings. They were down right as that announcement came out to the tune of, I'll get you a number here, tune about 9.35%. I was like, uh-oh, here goes Lulu getting smoked. Well, now that we look at it, Lululemon is trading up currently in the after hours 5.02%. So about face there. Their numbers, if we want to look at those numbers for anybody who cares for the details of the numbers, they reported $2, or they came out at $3.15, expected to have $2.92. So their earnings numbers were great, but they've lowered their year-over-year forecast. So they dropped their forecast, citing slowing down in the gyms, and they had a problem with one of their called breathe-through pants or breathe-through clothing that they had to recall and delay the release of that clothing. So that's hurting their bottom line. look, I don't trade Lululemon. I'm not a fan of Lululemon, so I guess this doesn't matter to me at all. But I think we've had several of you who have mentioned Lululemon as an investment. Well, if you look at this price chart right here, not so good. This thing was up over $500. Now you're down at 270. It's 272 in the after hour, so it is getting a nice pop right now in the after hour session. But to me, that trend is still intact, and they lowered their forecast going forward. So this may be one of those ones where it gaps up into supply. As you guys can see, where is it right now? It is right at this overhead supply. It's at the peak from the 26th of August. So just what we saw on Monday. It's gapped up into that. I'll be curious to see if that holds and we see some selling pressure on it tomorrow, because the numbers, while they're good, Lululemon's basically telling everybody, hey, next quarter we're not going to have those same kind of numbers. Things are going to look a little bit worse than they are today. How come I never see those girls at the grocery store? You don't live in California, do you, John? You see those girls at the grocery store all the time. All the time. I like the yoga mats. Those are like the biggest yoga mats I've ever seen. They're massive. AI did an interesting job. I noticed that all their shoulder blades and their scapulas all look the same. Like, it's just definitely a template that this AI program used. It's kind of comical. But yeah, there's your Lululemon. You know, for those who want to take a shot at buying the bottom there, I'd be a little careful. I just don't think that this is reversed as of yet. And you know, we could add on any moving averages here, except this super short one. What is this, a 9? Let me real quickly just make sure. I'll put on like a 20. Oh, this was a 20. All right, so the 20 actually just hooked up recently, although it's flattened on the last one. So technically this is a buy from the 20 period moving average perspective, but I still am kind of staying away. Is there a way to play the earnings with the straddle or some other options play to catch the wild swings? There is. It's above my pay grade though, believable. I don't do the spreads. There's ways that you know, if you're selling of options, that's obviously the best time to do it. Like the night before an earnings announcement, the best time, because the uncertainty is so high, the premium is really high. You can go way out on the spectrum and get a lot of premium, but just the risk involved is not worth it for me. I know some of you are probably more risk prone than me. Now I feel like I'm really getting old, because I used to be the guy that took on all the risk. Now I'm much more conservative with that, because I'd rather have consistency. There is, but it's not a strategy I use, believable. Maybe I'll bring on like a Larry or a Corey and see if they can elaborate on that one. Doing some straddles or some strategy to minimize their risk of earnings and play it, but to me it's just too much volatility. Too much. And the last one here, one of the other companies that reported earnings today, you had two. There was Dollar General was one of those, and there was another, what was the second name? I knew it was Dollar General. They reported earnings and they did pretty poorly, but there was another one I could swear. Well, I'll just go DG for Dollar General, but let me bring that one up for you guys. So Dollar General reported earnings, and I thought this is your kind of your joke of the day. I'm going to call this a donkey of the day, just to I don't have the name of the person that gets this donkey of the day, but here's why I think they're the donkey of the day. So Dollar General reported earnings today, and that was before market open. They gapped down huge. They were down 32% on the day. The headline read, Dollar General down 32%, and it was something to the effect of they're just, shoppers are because of the economy and inflation, shoppers are moving away from Dollar General. This deserves a donkey of the day, because if you've ever been into a Dollar General or a 99-cent store, these stores are the cheapest of the cheap. I mean, it's bargain basement. This is where you're going to go if you're strapped for cash and you're looking for a can of soup, right? Those are the types of places that you're going. So I don't think you can call this, you know, the runaway from inflation is, oh, it's really hurting Dollar General. If anything, a crash in price or a rise in price of goods and services is going to cause people to go buy the cheapest stuff out there. And you look right now, I think part of the reason you're seeing Walmart do so well right now is just that. It's people saying, hey, I'm going to watch my expenses. I'm going to start buying some stuff at Walmart. A lot of the food at Walmart is cheaper than a regular grocery store. And then you're in the store and you buy all this other stuff. So I thought that was really funny to see that headline for Dollar General. So DG today, again, I'm not buying Dollar General either. I think, let me get rid of these moving averages. I think they're a pain. You know, you look back at historic levels here, you are down to levels you haven't seen on Dollar General since 2017. That's a pretty long time. 7 years of time that is been running up, looked great for a while, and all of a sudden just giving it back. And it makes you wonder, like, how low is this thing going to go? Is this the beginning of the end for Dollar General? I don't think so, which means at some point it's going to become a good buy. Now, I'm going to go back to a weekly here just to look at this longer term. I'll go to a monthly. If we look at this monthly time frame here, the question is, where would be a decent point to buy back into this one? And it looks like you had a long period of basing right around this 66.50 mark, right? That's the very low end of that range. Very low end of the range right there. Market says most losers shop at 5 below. Hey now. That hits me right here. I've been called a loser for many things in my life. Many. The list is really, really long, but never for my shopping habits. That's Margaret. I'm gonna go to the $5 store today. I'm gonna go to Five Below today just so I can buy something to irritate you. I'm gonna grab a funky shirt just to torture you on our next show. See if I can actually do that one today. That'd be fun. So yeah, Dollar General. Again, I think that these stores all have a place. I frequent Dollar General 99-cent stores when I have events. Like if I'm having a party and need streamers or cups or just different items, I definitely don't mind going to these dollar stores. However, it would appear to me that based off what we're seeing with Dollar General, that something is fundamentally wrong, right? I mean, that thing's broken. It looks broken right now. That's right, Margaret. Run DMC. Come on, man. Run DMC. They're the OGs of the rap world. Man, they were turning it loose in 1986. It's funny, on a cassette tape I have, there was a girl, her name was Erin Durbin. She's now an attorney general in Sacramento. Props to her. She just did very, very well for herself. But she pirated that one. All right, Erin, I'm calling you. You're going to get in trouble now. The feds are coming. But back in the 80s, she made a cassette. On one side was Run DMC, Raising Hell, I think was the name of it. And the other side was Licensed to Ill by Beastie Boys, which I think forever changed my life from a music perspective. So I definitely had to pay homage to Run DMC. And no, I don't go to Party City. That place is too expensive. Party City's overpriced. You want balloons? Go to 99-cent store. Anyway, maybe we need to do a show on like how to save 50% in your grocery bill with TraderMerlin. All right. So that's it. I just wanted to show you those ones. Those are some of your big earnings plays today. There's really, if you look at the earnings front for tomorrow, I don't see anything that's really that noteworthy. I'm sorting by market cap here, and you see most of them are international. So, yeah, nothing really exciting for tomorrow. So it's all about today. And Dollar General, man, DG reporting $1.70 versus $1.79. They were supposed to make $1.79. And let's do that kind of same analysis that we've done for other companies, right? We've gone through and we've looked at the progression of earnings. So I'm just going to go back the last few quarters to see, like, is this thing really falling apart? Is there something I'm missing here? Their latest earnings, they were supposed to come out at $1.79. They reported $1.70, so they missed. The previous earnings, they had $1.65. I'm just doing the reported. Before that, $1.83. Before that, $1.26. Before that, $2.13. Before that, $2.34. So it's definitely slowing down, but $1.70 is nowhere near their lowest that they've had on earnings. Maybe this is that turning point where they start to move back around to the upside. They lowered their forecast, citing, the economic issues. This might be one of those times to look at potentially acquiring DG, but I'm gonna wait on that one. I will wait for a lower price if that in fact is the trend there. The TraderMerlin shopping app coming soon. I've been spending a ton of time playing around with different things. I don't know if you guys saw. I spent a bunch of time making some really simple videos. There's nothing special, but one of the guys I follow, not really follow, but I was doing some research on how can I get the viewership up to tens of thousands, if not 100,000 viewers, because then I can monetize this channel and I won't have to work for anybody else. I can make this a full-time gig. That would be kind of that would be a pretty fun thing. To do so, obviously you have to have more eyeballs on it. And because I don't pay for advertising on any channel anywhere, and I don't really do a lot of promotion on social media for this program, it's been an organic growth of the viewership. And I thank all of you who continue to watch on a regular basis. I know I'm losing some people, but that's okay. New ones will join along the way. There's a thing called shorts, which what a lot of people do is they take a snippet of some of their videos and they post it. It's supposed to be very short, 60 seconds or less. So I found this guy and he had a really interesting thing where you can say all kinds of, you come up with interesting facts about the markets And in a batch transaction, I made 50 of them last night, and I've uploaded them. So every morning at 6:30, a new one of these will roll out. And they're really simple. There's no real call to action. There's nothing really that exciting about them. But it's just to see if I'm going to be looking at the numbers and see if I do get new subscribers, if I do get some people that, more viewers join. If that's the case, I'll allocate some more time and effort to that, because I'm not a video developer by any stretch of the imagination, but it was fun playing around. I spent about 5 hours last night working with like 5 or 6 different software programs, coming up with different ideas. And I have playing with some new technology just before the show, which is pretty impressive. Some of the AI things that you can do are just fantastic. But, the program I was on today, which was Ninja Trader Live, obviously they have 2 hosts, and then they have a production team behind the curtain that's doing all the switching. They're doing everything I'm doing. They're running the Zoom. They're running OBS. They're doing all the lower thirds and switching, which is great. But I do it all myself for now. At some point, we'll get some help on it. We love our Dollar General stores here. Yep, great deals. Not everything's good, but sometimes it is. Let's see. We should have a special ability to get our chats read first. Well, you kind of do. I mean, I always read your chats first. Yeah, John, I think those will. The one that went out today only got a few views, so obviously it's nothing that I'm expecting to have millions of views on. But if it hits different eyeballs, great. I already noticed I got some spam. Somebody sent in a direct question from one of those videos today, and it's like clearly it was spam. The guy's like, "Oh, here's my seed phrase," and put his crypto seed phrase on there. I'm like, yeah, there's no way you're a real person, because no one would be that foolish. Okay, what else do we have to discuss today? I already did the trade tariffs. Thanks, Koja. Just I've got so many pots in the fire right now, looking at different opportunities and different things that I wanted to make an announcement earlier this month, but nothing's been solidified now. So I am in the process of looking at different opportunities, we shall say. A couple of those opportunities would actually prevent me from doing a show from 2 to 3. One of them is they're totally fine with me doing the show from 2 to 3, and I was like, okay, that I'm leaning towards that. So even though I'm going to be slammed with work and doing a ton of different things, I would still have the opportunity to come and do this show. So, okay, what about Intel? Says Koja. So this is a great question, Koja. And I'm glad you asked it, because I asked myself this many times. Intel, which was, the king of kings. Intel ran the computer world. Intel and Microsoft were it for the longest time. Okay, you could throw in Apple. But you look at this chart of Intel, and clearly something is broken, right? Even this last rally that started our last rally started in 2024, end of 2023. We had that huge rally. Yeah, they started with that, but they've completely cratered and literally negative on the year for Intel when the markets are up considerably on the year. So when you have highs on Intel that were up around $70, and here we are down at 20, it's hard not to look at a company like Intel and say, hey, is this a value play? Is this the point where I want to be buying Intel? And here's let's see, use it for long thought. Here's my thought on it. And again, it's just my 2 cents, not investment advice. In talking to my friends who are connected very closely with NVIDIA and deep in the AI and video world, when I bring up the topic of Intel, they laugh. Because Intel is built off this whole system of the 386 or x86 processor. And we talked about this with ARM, where an Intel chip is the brain of the computer and it does everything, but it's built with a preset bunch of things it's supposed to do, and for your purposes, your application, you may not actually use any of these functions. So an Intel processor is running and doing a bunch of stuff that's wasted resources, wasted energy, wasted computer space, wasted hard drive space, wasted everything. ARM comes along, and ARM is saying, well, we're going to we'll build chips that are designed specifically for a function. So it's not going to waste resources. It's not going to expend energy and cost for something that you don't need. And to me, that's a much better operation system. And then you have, I forget the name of the operating system that NVIDIA uses, but NVIDIA's chip processing technology is very different than x86. And based off of that, the capabilities of this kind of newer processing technology, I feel like it's going to start to render Intel obsolete. Now, not overnight, but I think the chart reflects the fact that Intel is certainly falling out of favor. Now, when we go to the store and we buy a computer, yeah, you can get an Intel chip or an AMD. But in the future, these things might be ARM and NVIDIA running those. You get the Blackwell chip on a laptop or something, it's going to run circles around anything that Intel's doing at this moment in time. So unless Intel, and I don't know if they are or not, but unless Intel completely changes their focus and really puts money into development and expanding their products and making them much better as opposed to just thinner, then it would seem to me that the world is going to turn more towards ARM and towards NVIDIA and say, we want those products. So as much as I look at Intel as this bellwether, this juggernaut, which has been at the forefront of the computing era since the 50s, well, not Intel in the 50s, but at least the computer evolution, I don't think it doesn't look great. Here's your all-time chart of Intel. It goes back into 1972. Wow, this company's as old as me. Wow, actually almost exactly as old as me. So I just feel like Intel is either got complacent, they've got too much bureaucracy, or they're too stubborn-headed and not looking forward to innovation and technological changes. Because remember, for a long time, they kind of had a monopoly. AMD came along and started to really create some great products that competed directly with Intel. But now NVIDIA's on a whole nother level. I mean, if we can go look at, here's the monthly of Intel, here's AMD. You got to ask yourself, well, what's broken here, right? This has rally, pullback, rally, pullback. Intel has sell-off, rally, sell-off. So it's like the exact opposite chart between Intel and AMD, and it feels like AMD is doing more forward thinking with their chips that design their product. But I'm not an expert in semiconductors. Obviously, when you take something like that and put it next to NVIDIA, you can see the demand is clearly on NVIDIA's camp. And if you look at something like, let's look at ARM. Now, this is going to be a much smaller sample because it doesn't have the data, right? This thing's only been around a while. But here's a weekly time frame of it. Impulse correction. It's making higher lows. Ultimately, that's what I'm looking for on this bad boy. Let's see. What else do we have? I got a bunch of comments came through on that one. I'll get to that in just a second. Mike, let me go to the other ones. Intel made AMD look like a joke back then. Isn't that funny, Margaret, how you go back a decade or so, Intel made AMD look silly. No one wanted AMD. And now if you put those two side by side, everyone wants AMD. Like if you had to choose apples to oranges here, I'm going to take the AMD. I mean, this show is built with AMD because they're better, from my purposes and my research, they're a better chip and they're cheaper prices. Intel is utilizing the most tower cranes in Phoenix metro building area out of their facilities. Really? So they're building something big out there? All right. Is Intel starting to make a classic W formation, he says. Well, I guess we can always look at things on different time frames to see that. INTC. No, INTC. There we go. And there's your weekly. Are you talking about on the daily? I saw that it feels like it's stabilized, right? I will give you that. It does look like it's forming a double bottom right now. So really, what could we do? I think this goes back to kind of my way of looking at things, which is let's just establish the range that it's been in, which is this yellow box. All right. For the most part, it's been stuck in this range since it jumped down on August 2nd. So for the last month, this thing's been stuck in that sideways range. I would say for those who are interested in, so I know there was obviously some interest in this one simply because you asked me about Intel. If there is an Intel for you, an interest on Intel, Koja, then I would wait for it to get above 20, call it $22. I'd put my line right here, and then it might start to fill that gap. But jumping on it now, in my opinion, is just a little too risky. I just don't see anything there. Now, what could change? If Intel all of a sudden made a press release that they're retooling their facilities to do more of what NVIDIA is doing, then jump right into that fray, then yeah, this could have a nice big move because now they have the domestic infrastructure to do that. Whereas NVIDIA is still building theirs out and relying on so much of materials from Taiwan Semiconductor. It's an interesting battle, right? Definitely an interesting battle. You can look at the whole sector. Look at SMH. This is a semiconductor ETF. It's been phenomenal. I mean, this is really what's been pushing tech to the upside. It just keeps going and going and going. This is an ETF called the Van Eck Semiconductor ETF. I don't remember exactly how many it has in it, but it has a basket of different semiconductor companies. Going back into 2015, this thing was down around 22, 24 bucks. And here we are now, 10x in 9 years. 10x 9 years, not too bad. Now, the only negative part I would say on this chart is this last pullback was pretty deep, and it rallied and didn't make a new high. So it may be slowing down, and that could be part of the reason why you're seeing Intel suffer. But yeah, this is just the daily here. So the past couple weeks on semiconductors have been a bit weaker. And there we go. Oh, Koja, thanks very much, man. I appreciate that. Thank you so much. I really do appreciate that. Isn't TSM building a super plant in Phoenix? Yes, they are. We talked about that last year, and the expectation was 4 years to completion, so maybe we're down to 3 now. So while it sounds great, Margaret, and certainly will be very helpful in production and increasing that and distribution and the reliance on TSM from China or from Taiwan, man, I'm getting all my Asian countries mixed up, from Taiwan, that will help out significantly, but we still got 3 years to go. So we're not out of the woods yet on that one, but I think once that factory does come online, that I think will be much, much, much better. Yeah, we got that. AMD Citrix was the other competitor back in the 90s. Cyrix. Yeah, I remember the name. I don't remember the company very well. All right. Anything else you guys want to discuss today? I saw Mike, you add one in here, says, I saw Dollar General also pays a dividend. Did they cut their dividend? Would that account for the big drop in price? I did not read that they cut their dividend, but if their earnings are down significantly, which they're not, right? If Dollar General's earnings are down significantly, then they would cut their dividend, but they're not. We looked at their earnings. Their earnings are actually fairly consistent. You came out with $1.70. Before that, you're $1.65. So it's, I don't know. I'll read through the paperwork there, Mike, and see. I don't know the update on that, if they've actually cut their dividend or not. If I'm Dollar General and I am paying a dividend, I would probably cut it. And the reason I would cut it is I would need to keep more of that money for operations if business isn't growing quickly, right? So we've talked about this before. You have growth companies like an NVIDIA, which, a super growth company is not going to pay you a dividend. They're going to take that money, put it right back into infrastructure and grow the business. And that's where you're going to get your rate of return, is a big increase in the share price of that company. A company that's stagnant, slow growth, not making big moves, not really investing too much in infrastructure, they're probably going to pay a dividend to entice you to buy those shares and drive the price up, and you earn a part of the earnings. So if Dollar General's earnings slow down and really start to, not look so good, they'll cut their dividend, save some of that capital to invest in themselves. And what will probably happen here is they need to go through and do some, restructuring internally, get rid of some departments, save some money here and there. But figure out how to drum up more business for their stores would be the first thing that I would look to do if I was Dollar General. All right, let me go to your economic calendars and well, there's no earnings for tomorrow, but let's check out that earnings calendar for mañana because it is a big day. It'll be a very exciting one, at least for me. I'm pretty excited about this one. You do have the core PCE price index numbers coming out tomorrow. We've talked about this over and over till we're blue in the face. Right now, the expectations are we're going to come out exactly like we did in the previous month, which is 0.2%. I think a lot of eyes are still watching this, even though I mentioned a couple weeks ago that I feel like the shift is moving towards the unemployment numbers, which I believe they are. There still is a big focus on this because if this has any sort of bump outlier, one way or the other, so let's say it comes out at 0. Well, that's great news, right? That's fantastic news for the central banks. That means inflation is done. Total green light to cut rates. If inflation does come out higher than 0.2, let's say 0.3 or 0.4, then the topic on CNBC, Fox, and Bloomberg will all turn to, well, wait a minute, maybe we're not going to get that rate cut in September because we have inflation back on track to the upside. And of course, that's their number one objective right now is inflation. So really important for you to watch this one tomorrow. Again, that's going to be 1 hour before the markets open, so you should have plenty of time to have your morning cup of coffee and watch those fireworks as they go on, and that will be the piece that really drives our market. Other things that are happening. you can see there's a few announcements here for the U.S. tomorrow. You have core PCE, of course, which is the best. You have personal income, personal spending, Chicago PMI numbers, and the University of Michigan Consumer Sentiment reports. And that rounds out your Friday session and the month of August. So on Monday, Monday I'll probably do the wrap-up show for the month of August. Chad says, have you seen how much XLI and XLV are up? Probably some defense companies. So what about monitoring them for bearish price action eventually if I had another sell-off like the recent tech sale? Yeah, I am watching them. It's part of my watch list down here at the bottom. I always keep an eye on these bad boys. But yes, industrials have been doing absolutely fantastic. I had drawn this line on here from a breakout perspective. We did break out on that on XLI. So industrials doing very well. And you also mentioned XLV, our old healthcare in there. And look, I think that this is going to do great for a little bit longer. I have a feeling that going into the election and near the end of the year, I think a lot of this is going to get hit. I think you're going to see the healthcare sector come under a lot of scrutiny from the government for price gouging and all these drugs. I mean, it's kind of embarrassing that we're all part of the human condition, and a company that's providing a drug that might be essential to someone's life cost them, they can't live their life financially because they're paying all this money with this drug that helps them live. That shouldn't be the case. And both candidates, Trump and Kamala Harris, are basically saying, big pharma, we're going to have to, put some curbs in place, whether it's insulin or other drugs out there. To me, on Tuesday, sorry. We'll cover that on Tuesday when I come back and do the show with David Warner, by the way. So, I don't know. Even though I see XLV looking fantastic, it looks incredibly strong, I'm kind of waiting for it to roll over a little bit and look to go short, because I think at some point your politicians are really going to hammer the cost of healthcare. They're going to talk about drugs, and drugs and healthcare are a very touchy topic, but they do have the power to make some changes with regards to healthcare costs and drug costs, and I think that's going to hit these bottom lines for these companies, but not yet, right? Still looks absolutely fantastic. So when you look at the bigger picture, let's go to a weekly on this bad boy. You can't zoom out anywhere and find a supply zone. So one of the things they were talking about on the Ninja Trader Live this morning, they did a little session on Fibonacci, which I thought was fun because you guys know my thoughts on fibs. I love fibs. I think they're great. I like extensions, but I think it gets a little too crazy when you look at things like Elliott Wave. But right now, trend is your friend to the bend at the end. I am certainly not shorting this now. There's nothing that tells me to short this. I need it to start making some new lows, and then I'll probably think about it. But I think the election is going to have a big part in that. And same thing with industrials. There's really nothing here. You got a breakout that just happened. You have a spinning top today, which is kind of a weaker formation. But those two look absolutely fantastic. And most of these big sectors do. Look at here's building materials. This is a weekly, by the way. So weekly on building materials, you guys notice you have a double top right now, a nice double top. Well, does that mean you short it right now? No. I think that if you're really aggressive, you wait for it to break these lows right around 92.41, and that's where you start building your short position. And then if it gets down below these lows from in here, I'm going to go where I see more points of contact. That's really, kind of right around the 87.22 mark. Breaks down below that, then I'll start building a bigger position. But right now, double top going sideways for building materials. You had energy. Right, that's one of the weaker ones out there. Nice little pullback in energy, but it's still making uptrends. You see this whole thing is higher highs, higher lows. Even though it's not straight up, it's still trending higher. Financials. Explain that one. Financials the last 4 days have been absolutely incredible. You have a 10% move. Oh, sorry, this is 4 weeks. Last month for financials, you're talking 10% jump overall. That is incredible move for financials as an overall sector. Industrials we talked about. Technologies is obviously the weaker one. Utilities rip into the upside. So everything has got this bullishness going to it, which is fine. At some point, that bullishness will slow down and give you an opportunity to buy back in if you feel that this trend might be over. But boy, this utilities chart is phenomenal. Let's see, technician. If a company has a dividend, typically drops the price of the stock before ex-dividend date. Yep. I don't think it matters, JD. So basically what happens if a company pays like a 30-cent dividend, the share price will drop 30 cents the next day. And somehow I think that's factored into the options because you received, the options are factored, or the dividends factored into the options as well. So wouldn't factor that one. There was another question that came through. Oh, dang it. I'm going to have to write them down. I didn't get to write these questions on the screen here. Let me see. Did I write it down? Nope. You got that 258,000 profit target for Bitcoin out of the morning show. Oh yeah. Hey, he asked about it, right? And if I wish I had more props, some graphics, so I would have shown the logic behind it. Because I don't know if you guys saw a tweet the other day, but there's this clown on social media, and there's a whole bunch of clowns. And all they are is they're pumpers. They're just trying to get somebody to pump. And so this guy says, mark my words, screenshot my tweet. In 30 days, Ripple will be $10 per coin. I'm like, brother, this thing's at 56 cents. It's never been above 350. There's no way on earth in 30 days that Ripple is going to be at $10. And I said, put your money where your mouth is. I'll take that bet and I'll give you whatever odds you want. I was blocked. I was blocked by that individual. So a lot of these people are just shilling out there. So Margaret, one thing I was happy about on that show, or at least with my $250,000 forecast, I didn't just pull it out of my backside. I have justification. I have the historical data to show here's why that is planned out for that target based off of historical precedent. So, people can't come at me like, oh, you're just making numbers up. Well, I'm actually not. I'm using calculations. So, thanks, Margaret. Remember, main intro. Let's go check out main. Oh, yeah, and Rob, not all are going to be up, right? So here's your Main Street Capital, T. Rowe Price. Remember, all of these guys have slightly different business models. Some might be institutional bankers. Some might be just there to raise capital. Some might be more just in retirement investment planning. Really depends on what the firm is. But in general, with XLF, was it JPM? There's one of your main catalysts right there. Beautiful one. Beautiful run to the upside. Okay, I'm gonna wrap this one up here, guys. I got just a bunch of stuff I want to get done. I'm gonna go actually play with more AI and see if I can get some other things done. I have some ideas brewing in my head, but it all revolves around time, which unfortunately, whoever decided to create this spinning ball or put us on it gave us 24 hours in a day, which just does not seem like enough time. So I'm going through my list here, and it's like, okay, what do I cut out? Sleep. I'll cut out sleep. There we go. All right. Well, thank you guys. I hope you enjoyed it. Koja, thank you very much for the contribution. I do appreciate that. Hope you all enjoyed. And put your comments down below any of my YouTube videos. If you have anything else you want me to discuss, things you want me to go over on next show, upcoming show, just put it out there on TraderMerlin@gmail.com. Email me. Yes, I'm going to go play with my old pup. He's getting older and older and older, man. He's kind of sad sometimes. His back legs drag, but we're still going to go walk him. This will be his third walk of the day. So thank you guys so much. Have a fantastic remainder of your day. I will see you mañana for our trading week wrap up. Cheers.